Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest on the show, just head on over to missionmatters.com and click on Be Our Guest to apply. All right, so today I have Neil O'Donnell on the line. He's managing partner over at Legal Scale LLP. Neil, welcome to the show.
Happy to be here. Thank you so much.
All right, Neil, I'm feeling like it's a Legal Scale LLP day over at Mission Matters. I know I had
Certainly
the
is.
other co-founder on earlier today, Mahak Rashid, and let me tell you, we had a ball. I'm excited to get in on your side of and to talk about your practice as well, and hear some of those stories, the deals you're working on, the trends, and really just have some fun today. So a lot for us to cover here, and just to get us started, we're going to start with what we like to call our Mission Matters Minute. So Neil, at Mission Matters, our aim and our goal is to amplify stories for entrepreneurs, executives, and experts. That's what we do. Neil, what mission matters to you?
The mission that matters to me is to get transactions done. I think that we're coming through an interesting time where a lot of law firms are charging ever higher rates and doing more and more complex transactions. But there's a time within the market when legal fees just really are impeding transactions from coming together, or attorneys are more interested in breaking the wheel than helping the wheel go faster. At Legal Scale, we really try, our mission, our goal is always to make sure that we're helping deals get done. That comes in the form of sometimes lowering our rates or figuring out how to be more efficient on the transaction, can come in the form of introducing a potential lender with a potential borrower or an investor with a fund. And so our goal seek within every deal that we do is to get that deal done and get it done efficiently.
Yeah, it's great. Love bringing mission-based individuals on to share, why they do what they do, how they're doing it, and what we all learn from it. And in this case, how to get deals done, man. So good stuff.
Appreciate
now, just to kick this off, I understand that yourself and the other co-founder will be attending the Venture Debt Conference 2025 over on the East Coast. And I know you were referred over to Phil, Deal Flow event guys. So big shout out to them. And I think, correct me if I'm off on this, Neil, you've been supporting the conference and attending and things like that since inception. Am I off on that?
That's correct. We've gone to the Venture Debt Conference for the last 2 years. We're going this year. We are a silver sponsor. Deal Flow puts on excellent events, including Venture Debt. We're truly lucky to have a great conference like the Venture Debt Conference in New York. There previously weren't a lot of New York-based debt conferences. There are others in Miami. There's a large one in Vegas. But to have a large debt conference here in New York is extraordinary. And this conference is actually relatively unique too. So kudos to Deal Flow for finding so many excellent borrowers at this conference. It's a fantastic event. It's our favorite event of the year.
What keeps you coming back? First
and foremost, we are a venture debt. We first got started working with funds that did a number of debt products, including venture debt. It is a unique space for us because there is the need for sophisticated legal work, but also to make sure that you're balancing that with efficiency so that both the borrower and the lender can bear the cost and expense, and that they understand the product. And so we really like venture debt. We like it as a product. We do a lot of it as a firm. And furthermore, if you go to SF Vegas, which is a spectacular conference, or ABS East, another fantastic conference, there's no shortage of a very, very large lender there, but there's fewer borrowers. So for us to be able to find a conference that caters to access for people that might be looking at a credit instrument for the first time is fantastic, because then we can go into our role as counsel from day one, from hour one, from the first meeting and the first handshake at the conference. And so we mean it sincerely when the makeup of the Deal Flow Venture Debt Conference is different and is much better for our firm in terms of meeting really, really interesting, innovative borrowers very early in their life cycle.
Yeah. I want to get a little bit more into your background, Neil. How did you get started, and what attracted you to this field in general? Before we get into Legal Scale, how did you get started?
That's a great question, and I appreciate it. So both of my parents are attorneys. My sister is an attorney. We all do different work. I always understood and appreciated the personal power of being an attorney and advising clients. And I remember seeing my dad get up at 5 a.m. And sit at our kitchen table and do work. And so I was incepted into being a lawyer from very young. And my parents
That's
met in law school.
awesome. Whenever somebody comes on and tells me, I don't, whatever their parent lineage is, when everybody kind of does the same thing, I gotta know, what was it like in the holidays? Like holiday
That's
time
right.
what was it like? Invite me over right now. What was it like? Dinner
My
table.
parents loved the law, and they would talk about law school constantly because most of their friend group was from law school. They had gone to the University of Pittsburgh for law school, and they loved it.
Mm.
Holidays are extraordinarily fun because my mom loves a holiday, exempting being an attorney or anything else. And there are conversations around the most recent Supreme Court decision or anything else. My sister really is an excellent constitutional lawyer, and
Mm.
she is very very bright and focuses on things that are on the front page of whether it's the Wall Street Journal, the New York Times, really focused on items that have been relevant even lately in terms of voting rights and other items. My dad is a personal injury lawyer. My mom does estates and trusts, and of course, I focus on credit funds. And so it's a very disparate group. I'm talking more about the business section of the Wall Street Journal than the front page. It's a fantastic time, and we're all using. What I like about it is that we're using the law in different ways, but all with the goal of helping people. And in my way, the way of helping people is to get these excellent and mutually beneficial transactions done.
Man, that's fun. When you picked your focus, what was that conversation like ultimately? It was pretty cool, I'm guessing, like, because you have so many
I
different
appreciate it.
sides of this.
I appreciate it. My parents were thrilled I was going to law school. I went for a JD MBA, which was very helpful in terms of making sure that we could add value to clients. And
Yeah.
I'd always had an interest in business and investing as well as the law.
Hmm.
They were thrilled. And Cornell Law School's JD MBA program was an extraordinary way to get up to speed. They actually have a 3-year JD MBA program, so it wasn't as though I was in school for 4 years or even longer.
Hmm.
And it was a fantastic outcome. So they were thrilled. They were happy with the decision. It combined a lot of my interests, and I get to work, sometimes 12 or 13 hours a day, but I'm tap dancing to work, just like Warren Buffett would say. So I really like it. And my parents in different niches are working the same hours and equally as satisfied with their career.
That's what an amazing family. Shout out to mom and dad out there
That's
who
right.
made this happen, right? For those kids.
That's
Love it.
exactly right. I appreciate
It's a
it.
great story. Let's switch it up a bit here. I do want to go into legal scale. Maybe just start at the beginning with legal scale. Why found legal scale in the first place? Like, what was the idea or the thesis that made this thing to where it's like, I'm going to spend some time on this. This is my thing.
So when I left Cornell, I worked at Davis Polk, as does my partner in Legal Scale, Mahek Rashid. We had an excellent time there. It was an extraordinary place to learn what we call like corporate legal
Oh, were
hygiene.
both of you together there? You worked together there?
Correct. We were
Oh,
actually we were both JD MBAs at Cornell Law School. We both worked at Davis
so
Polk.
you known each other back since then, since college.
Correct. We since law school, since the first
Law school.
first
Excuse me. Yes.
1L year, and it was fantastic. We absolutely loved working at Davis Polk. I got to work in 2 groups, one on the capital markets distribution side, another within the restructuring group, both of which were excellent training for what we're doing now, and also got to work on investment management matters and other matters that are now the principal tenets of my practice. What I saw on the other hand was that there were, because I had an interest in business, a number of dynamic and interesting funds that were coming together. Sometimes they were even just investment clubs at inception. For example, one of our clients, Upper 90, started as an investment club, then put together its first fund, and now has grown to several billion AUM. We're really lucky to work with them, but they're really characteristic and iconic of a large trend, which was that private credit was growing. These dynamic asset managers knew how to apply credit in a different way that was potentially more accretive than traditional investments. And so upon seeing that, I wanted to assist those firms, and the best way to do so was to put out my own shingle at Legal Scale. And especially once Mahek came on board, I could combine my funds expertise with her expertise in deploying funds from that investment vehicle into private credit investments.
What was that? A lot of entrepreneurs, a lot of executives that watch this show. What was that like? That moment when you decided, I'll use your words to hang that shingle. Like, what was that like and go out? Because that's I'm getting nervous over here just thinking about it.
There was some level of risk, of course, in doing it.
Always.
Always initially very low overhead. Of course, it was just myself
Yeah.
and a paralegal. Matt came on board, and the rocket ship really took off.
Yeah.
The idea that I had was that I was going to learn much more about client acquisition and meeting clients' needs than I would have at a large law firm, and that thesis was immediately true.
Yeah.
I was uniquely blessed in order to be able to, one, take that risk, and then two, to find so many other attorneys. And right now we have 15 attorneys on the platform. We're actually adding 2 more in the next 2 weeks. We've been
Congratulations.
really, thank you so much. But we found other growth-minded, entrepreneurship-minded attorneys that are trying to do the same thing. And it's of course about adding clients. It's of course about doing business. But the fundamental thing that we're looking for from each attorney that joins us is experience and expertise, but also the desire to take ownership of your own career. And that's what I had from the very moment that I stepped off the Davis Polk platform and started my own firm.
Yeah. Talk a little bit more about your particular practice area in the company or in the firm. Talk a little bit more about that.
Of course. So I form funds. That's my primary practice. We help investment managers with day-to-day decisions and then mission critical items. Sometimes that's the wind down or rollover of the funds. Even more common, it is the launch of a new hedge fund, private credit or private equity vehicle. And we do that every day. We're right now in the midst of 6 or 7 fund launches, one of which is a very large hedge fund, which will be a private credit fund that focuses on both, it's called a fast-paced, slow-paced structure. So it is fund formation across the gamut. And that is a matter of working with the investment manager, tailoring the product to the investment manager needs, and then of course, making sure that it works within the broader market for landing limited partners and investors onto that investment vehicle.
Now, what type of managers and or investors are you working with? So is it like who's typically a good fit to work with your firm in this space, for your practice in particular?
Ideal asset managers for us, but first and foremost, before we even get into numbers or anything else, we're looking for asset managers that are dynamic, that are innovative, that are looking at new and interesting deals. And the reason why is that both myself and my partner are JD MBAs, and we love business. And the time at which we do our best work is when we understand the thesis behind a fund, the model behind a transaction. And that's been really helpful for us in the midst of our own careers. In addition to that dynamism, we're also looking for asset managers that, of course, have enough scale so that we can do interesting work for them time and time again. We're often looking for managers that can grow alongside of us. And so most of the managers that we have might have 1/2 or 2/3 money from large institutional investors. And what that signals to us is that they can continue to grow, that they have a nexus of interested investors, that if the asset manager performs, and of course, we're betting like everyone else that they will, that the next fund will be larger than the first fund, and then the third fund larger than the second. And so that's been really helpful for us in terms of making sure that the clients that we're adding, one, can leverage our expertise, and two, will continue to grow alongside of us, because that results in the best relationships and true economies of scope.
Yeah. Talk to me about some of the credit deals that you're working on, or like how do you ensure that you're working on interesting credit deals? Like, talk to me about that.
So I think one item that's been really helpful is that there's synergies across our practices. And so one transaction that comes to mind that was from last year involved a company that purchased a large software business. The company was based in Boston, and as was the software business. For them, we launched an SPV that was dedicated to the purchase, and that was an item that I led. We also worked on several corporate items, including a fresh equity investment. We raised new debt in order to take over the business, and there were a number of items for an existing debt facility. All of those debt items Mahek led as my partner, and so that was just a fantastic transaction for us, where by virtue of coordinating with the business that took over the software company Madwire, we got to leverage each practice, each domain of the firm and what we focus on. And that's why really clients come to us. It was a complex transaction that spanned numerous groups. And I frankly think that we did a much better job than any large law firm would have done. And the reason is because we closely aligned between 7 or 8 associates on our platform to make sure the fund was stood up on time and had a clear expiration of the investment thesis on behalf of the purchase of Madwire, that there was people understood the equity and all debt investments. And so that coordination and synergy across our practices is why clients use us.
That would seem like a competitive advantage there. Am I
I
off on
appreciate it.
that or?
That's exactly right. It's a key competitive advantage of ours. And when you're going to a boutique law firm like ours,
Mhm.
because of our expertise in financing transactions, complex, mission critical financing transactions get done, and they get done more quickly than if a large law firm had been engaged.
Yeah. Talk to me about some like what kind of trends that you're seeing right now, just in fund formation and credit in general. Like talk to me about that.
So credit funds, the first trend is simple growth. There's been
Yeah.
a lot of liquidity behind credit funds, and we've stood up more credit funds in the second half of 2024 and until 2025 than we've done in the past. And so we're
Wow.
lucky that we've grown our funds team by virtue of growth and
Now, is
interest
that
within
at your,
private credit.
would you say that's at, I know at your firm that's the case, but would you say in the industry as a whole it's going up and growing at the moment or?
The industry is also growing.
Yeah.
We've gone to SF Vegas for the last 3 years, which is the largest private credit conference in the United States.
Mhm.
SF Vegas has markedly grown even in just the 3 years that we've been there. I'd say it's probably
Mm.
grown 30 or 40%. So as a category, private credit has truly grown, and we expect that growth to continue. The reason why is that there's a number of tailwinds. There could be changes
Mm.
to the tax code that are helpful with greater equalization between ordinary income that comes off of a credit instrument versus
Yeah.
capital gains that comes off of an equity instrument. Uh, there's just more focus on this category from insurance companies and
Mhm.
other prospective investors. And so we're seeing more funds and larger funds be put together
Mm.
within the private credit space.
Yeah. And you said you think that'll continue, right? At least for the next, you
I
know.
think so. Yeah, we're not seeing. There's a famous economist, Herbert Stein, that said, "If something can't go on forever, it will stop." It's, of course, there, but
How do you get to attribute that one? Of course, good, right?
yeah, exactly. It's fantastic. Actually, Ben Stein from Ferris Bueller's Dad was Herbert Stein, and it's one of my favorite economic laws. I think so. There will be. We're yet to see though the ingredients of anything that would slow the growth of private credit. In
Mm.
fact, I think that the last 6 months have the trend has actually gone faster, and
Mhm.
we're seeing more activity. We're also seeing it across more markets as well. We're doing a lot of transactions in Latin America, both
Mm.
principally Mexico and Colombia. We're
Mhm.
doing a number of transactions in Asia and in Europe. So
Mm.
it really runs the gamut. And from our perspective, private credit funds that are amassing more capital will be putting more money behind private credit deals that are well suited and tailored to the
Yeah.
clients. So unlike a traditional bank facility as well, the positive outgrowth of this for borrowers would be that they could get more money on more
Mhm.
tailored, better suited terms that fit their business.
Amazing. Well, Neil, this has been a lot of fun having you on the show today and getting some updates on what's going on in your world and also getting ready for this venture debt conference 2025. That
Can't
being
wait.
said, I mean, what's next? What's next for you? What's next for Legal Scale and the team?
What's next for us is continued growth. Myself and
Mhm.
my partner have a buy entrepreneur, for entrepreneur mentality, and for us that means finding excellent people to put on the platform. We
Yeah.
endeavor to keep growing within these niches of fund formation and credit work. And I would say unabashedly that our endeavor is to grow a much larger firm from here. Like I said, we're going to have
Mhm.
17 people on the platform as of the end of this March, as of the end of March, and then
Yeah.
we're looking forward to adding even more associates. We foresee having a 50 or 60 person firm by 2030, and every
Mm.
day is steering the ship towards that awesome outcome.
Come on, man. I love that. The entrepreneurial spirit is alive. How do people follow up? How do they connect with you and your team now?
Perfect. So everyone can reach out to us at contact@legalscale.com. My email is the same as my name, neil@legalscale.com. That's the principal way that we interface with any sort of inbounds, which is fantastic. I
Yeah.
would say if anyone else wants to reach out to myself and my partner too, we constantly receive inbounds through LinkedIn and other platforms. Overall, the goal for us is to make sure that we're growing the ecosystem. If people
Mm.
feel as though they don't have a fund right now, or they don't have a transaction in mind, but they just wanted to ping us for what we're even seeing in the market as it's a continuation of this interview, I'm here for
Yeah.
that. The goal seek for this is we're seeing growth, we're seeing activity, and we want to foment even more.
Perfect. And for everybody watching, just so you know, we'll definitely put the links in the show notes so you can just click on the link and head right on over. And speaking of the audience, if this is your first time with Mission Matters and you haven't done it yet, hit that subscribe or follow button. This is a daily show. Each and every day, we're bringing you new content, new ideas, and hopefully new inspiration to help you along the way in your journey as well. So again, hit that subscribe or follow button. And Neil, man, thanks again for coming on.
Thank you so much for having me. Big fan of the show. Thank you.